Before we begin, here's how to earn continuing professional education credit for attending this session. Gain valuable insights by attending the podcast, then complete the assessment test to download your certificate. To do this, follow these simple steps. Click on the link in your description to access the session. Create a free account and attend the podcast. After the podcast, take the assessment test and download your certificate. It's easy, and it's free. We highly recommend checking out our subscription. Let's get started.
With all these changes happening, there is this thing that I continue to see every year. Businesses, they are operating either understaffed or with untrained tax teams. The untrained tax teams is more lethal, I think. So, if you have ever been exposed to this team structure, how should companies structure their internal compliance teams to ensure there is accuracy into this?
Wow, what a great question. I have to tell you, this is an area that in my career we sort of paved the way for this as my career has evolved, meaning that tax was always sort of a corporate thing, and those tax people kind of sat off at the other part of the business, and no one really interacted with them, and we didn't really know what they did, that kind of thing. And I think that over the years, what we have found is that that's not a good thing. Here's why. Yeah. Penalties can be assessed, millions of dollars can be assessed by the IRS every year for a variety of different types of tax issues. And if you don't have a good balance in the organization, right, that stuff can get hidden very quickly, and the leadership in the organization may not realize really what's going on. And I'll give you an example. In my career, I was hired to work for a financial institution that largely did all of its information reporting tax through operations. It never had any corporate tax oversight or compliance oversight of those operational teams. And so when I was hired to come into the organization and look at this, my first question, having experience in this world, said, well, where's all the penalties? Who's tracking the penalties? And they were like, what penalties? And so it took me a few months, but I found them, and I found who was hiding them, and I found where they were, and I was able to get, transparency into them. But I think it was a really good lesson for the organization to understand that.
Welcome everyone to another edition of your favorite podcast we're trying to figure out. I'm your host Saul, and today we're tackling a topic that's becoming increasingly critical for businesses of all sizes: tax compliance. With regulations evolving, digital reporting becoming the norm, and tax authorities ramping up enforcement, staying compliant is more challenging than ever. That's why I'm excited to have Wendy Walker with us today. She's the VP of Regulatory Affairs at Sovos and a tax compliance expert who has worked closely with businesses navigating these compliances. Wendy, welcome to the show.
Thank you very much for having me, Saul. I'm glad to be here.
Absolutely. Now, before we dive in, I just want to remind our viewers, if you have questions for Wendy, drop them in the comments on LinkedIn or YouTube. And if you're looking for CPE credits, you can do that by joining us on MYCPE ONE at mycpe.com/podcasts. Plus, you can also listen to this podcast on the go by downloading the MYCPE ONE mobile app, available on the App Store on iOS and the Play Store for Android. Now, before we dive in, Wendy, I just wanted to, take this moment to, if you could just let us know how you started your journey and how it paved your path into this global regulatory affairs. So if you could enlighten our speakers with that.
I think like many people that work in tax, I actually did start out in accounting, right? So I a small business, early, my very first job, I worked in accounting. I worked in procurement. I worked in accounts payable. So, just different areas of finance that I was involved in. And early on in my career, I was responsible for information reporting tax. So whether that was 1099 reporting for accounts payable or payroll withholding and reporting for employees. In my different roles early in my career, day-to-day accounting, but then always responsible for kind of that annual year-end reporting process. And so
Yes.
then fast forward, I think as my career got, took off a bit, I took a role in financial services in the early 2000s with JP Morgan Chase. And, they're currently the largest bank in the world, but even back then they were a pretty big bank. And they were, as like any, receiving a lot of regulatory scrutiny, and certainly in the tax world, had been undergoing some audits and such. And so I actually came into that role for the first time in my career, working on information reporting tax issues as a full-time job, right? As
Yeah.
opposed to being kind of a once a year thing.
Yeah.
So, seeing that at scale, and then from there, it just kind of took off. This area of tax has just grown exponentially since around the 2008 timeframe. So many tax laws that have been passed that require expanded information reporting, new information reporting, new withholding. And so my career has just kind of evolved into all things information reporting tax across various industries. So I'm in regulatory affairs now. So
Wow.
really working more on the tax policy side because I work with clients in so many industries that are impacted by some of the tax compliance issues we'll talk about today.
Yeah, absolutely. I mean, I can imagine, from looking at tax compliance as a once in a year checklist item to incorporating it as a day-to-day routine, incorporating it into strategy. Very, very interesting, So, let's start with the big picture. What are the most significant tax regulatory changes that are impacting businesses today?
So, well, I mean, there's definitely the one that's front and center, I think that everyone's paying attention to is the expiring Tax Cuts and Jobs Act provision,
Yes.
right? This is front and center for businesses that are operating in the United States. The TCJA had some really key provisions that impact businesses. Obviously, the top income tax rate for businesses was cut from 35% down to 21%. So,
Yeah.
we're hoping that stays. The law included a new 20% QBI, qualified business income tax deduction under the new Section 199A. And then there were changes to like Section 1031 like-kind exchange rules that to only apply to real property and not virtual property. Probably the most significant change from our perspective in the information reporting tax world, this impacted every business in the United States, and that was the change to the individual income tax rates, the
Right.
elimination of the standard deduction, right?
Yeah.
With that, employers, every company out there was required to change the way they onboard a new employee. So we had new W-4 forms, a new way to calculate payroll income taxes, right? And ultimately W-2 reporting. And that change also significantly impacted retirement benefit administrators.
Yes.
Every time an individual takes an unscheduled distribution from a retirement or a pension account, that taxpayer has to fill out the sister form to the W-4,
Yes.
that's the W-4P, right? That form relies on the same income tax calculation tables that the W-4 did. So the industry, both the retirement kind of benefits administration industry, as well as just employers across the spectrum, have built pretty significant changes to their systems and operating processes just as a result of the TCJA.
Absolutely. Absolutely. And it's not just the US, right? I mean, with the TCJS, we also saw this global push towards digital tax compliance, with countries implementing this real-time reporting requirements. So how is this impacting multinational businesses?
Yeah, absolutely. So on the global side, right, it's a bit of a different landscape because to your point, not only are they dealing, if they're operating in the US, they're not only dealing with US regulations, but they're dealing with non-US. Digital transactions, this can mean online payment transactions using apps to settle payments of goods and services. It can mean crypto asset transactions where you're using
Yes.
apps to settle sales of crypto assets. This can
Hmm.
mean digital advertising, e-commerce, right? Streaming and downloading information. So digital transactions in general are at the forefront of tax administration activities around the world. A lot of
Right.
regulations that are cropping up. And what we're seeing is the regulations are aimed at different parties in the transaction that are occurring. So example would be the Parliament enacted the DAC 7 regime.
Hmm.
basically introduced a reporting obligation for platforms that settle digital payments to report to the sellers and the government information about those sales. There's
Right.
the DAC 8 regime, which focuses on tax income that's derived from crypto transactions paid by businesses that are settling sales of crypto transactions. So we've seen a lot going on around those types of digital payments, goods and services, as well as crypto assets. For many years now, though, the OECD, Organization for Economic and Cooperative Development, they've been working on kind of a global forum. They're trying to get countries to reach a consensus on the Pillar 1 and Pillar 2.
No one, yeah.
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 That would essentially, those rules would essentially reduce the ability of a business to shift profits from, a high income tax jurisdiction to a low one, which of course, reduces their income tax expense. But not wanting to wait for the OECD to finish that global work that they're doing, a lot of the countries, individual countries, have enacted their own digital service transaction or DST taxes. So that means that, if you're a US business and you're operating in those different countries, you're subject to an additional tax on gross revenue from digital services, from a variety of digital services. So, as businesses go global, operations become more digital, taxes following them.
Do you want to earn CPE credit? Take this course of MyCPE ONE to earn free credit. Click the link in the description to get started.
Yeah, and also for the fact that, today with the growth of, digital platforms, you don't really know where your customer is based at or where your vendor is based at. And those things are happening across the globe. They could be connected to the US business, but they are across the board. And, you mentioned about OECD, Pillar 1 and Pillar 2. And, as every time I listen about this, there's always a discussion happening about the BEPS, the base erosion and profit sharing. And now everybody loves that term. Everybody loves that term. But then when I tell them, all right, but do you know what it really means? And they're like, for some, it's like, it's just a buzzword. So, just to enlighten everybody, why don't you just give a crash course into what that really means?
Well, as I said, this really is about businesses that are shifting profits that they're earning in high income tax jurisdictions. They're taking deductions in order to shift those profits over to lower income tax jurisdictions so that they can reduce the corporate income tax expense across the board. And what the OECD is trying to do is come up with a global framework where this would eliminate the ability for companies to, basically plan for lower tax rates by shifting those profits, and instead would subject them to a global tax rate depending on the jurisdiction. It seems like they're putting in different rates, but the idea was it would be a global tax rate on digital services a variety of digital services transactions.
and with you interacting with so many businesses, I'm sure you must be talking about this day in, day out, but I imagine that many businesses may be although underestimating the impact of these changes.
Absolutely.
So what are some common misconceptions that you have encountered when talking to businesses about this?
So, not as much in this space, I would say. I would say where I'm seeing some really big misconceptions is back in the information reporting space. So I'm seeing it in, for example, in marketplaces, the 1099K reporting world, if you've heard about that one. So I've seen a lot of misinformation over the last couple of years there. It's been kind of frustrating because the confusion I'm seeing, it kind of falls in two categories. The first one I'm seeing is that, so I guess to take a step back, what I'm referring to is the 1099K form. It reports non-employee compensation payments for goods and services that are paid by online platform companies through payment apps. It also reports credit card payments that are made by that payment processors settle between buyers and sellers. And the problem is that the 1099K, if you're reporting credit card transactions, no reporting threshold. If you're reporting online app payments, let's say DoorDash or Uber or even PayPal type payments, then it was a 20,000 and 200 transaction threshold. So two very different thresholds on the same information return. And in 2021, Congress tried to align the reporting thresholds for non-employee comp. So we have non-employee comp reported on a 1099 miscellaneous. It's reported on a 1099 non-employee NEC form,
NEC,
but then
yes.
also on this K. And so I think Congress was trying to, align across those three forms a $600 threshold. That's, so that all the forms would be reported following the same rules. But I think the issue or the frustration that I've seen in the industry is that the companies that don't want to have to report the 1099 case following the new $600 threshold, they've done a really good job in the media of, kind of putting a lot of FUD out there to scare taxpayers. So I've seen headlines that call it, for example, a new tax on small business, which is completely untrue, right? You have to report all your income, whether you get a 1099 or not. So
absolutely.
So I've seen it, being called a new tax, which isn't true. I've seen headlines warn that P2P transactions, right? Personal transactions are going to get reported. Very frustrating to me because there are a variety of federal regs like the Bank Secrecy Act from 2002 that already require these businesses to identify, a business account versus a consumer account, and further require them to monitor the activities going on in those accounts for money laundering purposes to know whether or not they're P2P transactions versus business. So some of that FUD that I've been seeing out there is frustrating because it's either untrue or it's created by a lack of due diligence happening at the business level and not because of what the legislation requires. So I think that's a big one that I'm seeing a lot of misinformation about.
Yep. All the way from, the ERC mills that we saw cropping up, it's just that, this era of social media and influencership and everything, everybody wants to jump the gun on everything that's happening. Like off late, we are seeing a lot of people talking about the tariffs and the trade wars and everything that's happening without actually getting into it. In fact, I was so surprised. In fact, this is, I know, a little bit off topic, but I heard this guy say that, we're seeing the tariff thing and we're thinking, oh, how does it bring the tax rate down? But he actually pointed out that, United States actually did not have a proper tax system in place until like the 1930s or something. We actually were dependent on the tariffs itself.
That's correct.
And I was like mind blown because
I think it's an interesting conversation because, people are very like afraid of tariffs and what's going, gosh, what is this? But I think it's actually a weapon in our arsenal that we've not used as the United States for quite a while effectively. I mean, I certainly do not believe headlines that I see that say that this will replace the IRS in any case, or there is I don't see how tariffs could ever fund the whole of the federal government, right? But I do think that this might be an interesting way to get at our federal deficit, right? Because we've struggled. The last few presidents haven't even been able to balance our budget on an annual basis, let alone worry about the debt we have. So for me, this is maybe a really interesting answer to, our debt, our federal deficit, or our debt issue, our national debt issue.
Yes. And in fact, I'm just also seeing that, I was just looking into this report wherein we're talking about what are the filing trends that we're going to be seeing in the 2025. And IRS released the e-file program, and we are seeing that bump coming in, wherein technology has started to now play a very significant role in this information reporting and tax compliance, information, and no business is an exception. Tax compliance is no exception to this. So, with all the businesses that you're talking to, how are businesses leveraging this AI, which is the most happening buzzword, and automation into improving their compliance tactics? Or do you think it's very lethal?
Yeah, no, I think there's probably two things there. I think, well, first of all, at the IRS and the state tax authorities, we are seeing a modernization effort that's really impacting day-to-day tax administration. So at the IRS, as you mentioned, they've been working on this new 1099 filing system to intake. They receive currently more than 5 billion information returns annually. So, and that system that they use today is from the late 1980s. It's called FIRE, Filing Information Returns Electronically. And so they've been been trying to roll out this new system for a few years. They actually received money under the first Trump administration through the Taxpayer First Act of 2019 to build. This was one of many things that they were trying to modernize. And so they started building it very quickly, I think in early 2020 or late 2020. So this new system was rolled out in 2023 in very infant stages. But it continues to be evolved to support more information returns and more volumes. I think for 2023 filing season, the IRS received about 10 million returns across that system. And again, they receive about 5 billion returns annually. So it's just a drop in the bucket on the new system compared to, what they're getting on the old one. But businesses were really, I think there were two reasons we were seeing they were hesitant to move to this new platform. One was because the legacy fire system, it's built into virtually every core operating system out there. So ERPs that produce your, accounts payable 1099 forms, employee payroll data, bank operating systems that produce interest and dividend statements and other forms, retirement systems, insurance claims management systems, like all of these operating systems, they've got built into them a 1099 file, and that file is already formatted in that legacy, 1980s format. So I think a lot of businesses were like, how do we, they can't just go and change every one of those systems, right? That's very expensive to do that. So they were thinking from a strategy perspective, how do we keep those systems intact, but still migrate over and be able to use the new filing process? So there's been that. But I think the other issue has been the IRS didn't support everything in the new system. So they really weren't able to migrate all of their tax reporting obligations to the system. And why would you do part of your systems and not all of them at the same time, right? So I think they were waiting for the IRS to kind of mature a bit in the new system. So as I said, 10 million forms last year, not a sneeze, but definitely a drop in the bucket. So I think, I think we're going to see over the next year or so, people start to really move returns to the system. There was a key form that was not being supported in the system that it's called the 1042S return, and that return reports transactions of with non-US taxpayers, so cross-border transactions. And it is a very complicated return for businesses to report, very complicated for the IRS to process. And so it obviously was low on their list of priority to get developed. But here about 2 weeks ago, they reached out to us as one of the software filers that tests with them and uses the new system, and told us they were going to start support for that form. So it's a big deal to us because it is the last major form that they need to support. That we think will really drive businesses to actually start migrating over to the new system.
Access latest and trending CPE courses with my CPE One Unlimited Access subscription. Subscribe now.
Yeah, and this is this thing that like you mentioned, fire is incorporated into all this legacy systems, and there's also the point that it's a lot of data. It's a lot of data, and to have that upward compatibility to move it all into the new system while preserving the old system, that's a challenge in itself. Also to have that download compatibility, because if the new system needed to access some of the old records, which could be in some, God knows, I mean, Excel was not there before the 1990s. It was all Lotus 1, 2, 3 notes and everything. So God knows, it could have been there.
Aging yourself here,
Yeah. So it could be crazy. And I hear this thing that they should start using AI and incorporating AI into it, because AI, machine learning, I mean, I don't mean the AI that helps you write the emails. I'm talking about the machine learning part that can sift through those large data sets and identify those things and transfer it. But I think I think we're too early to predict whether AI would actually reach there. I mean,
actually, we're seeing a little bit with the IRS. I'll give you an example, mostly in the fraud detection, fraud prevention area. So even in the legacy fire system, we're seeing them use AI, not just in the newer technology. So what we're seeing is, to your point, I mean, we're talking billions and billions of returns that are coming in, very large sets of data that they're trying to find the fraudster or the repetitive pattern of a fraudster, occurring. And the other thing I'll tell you in the information reporting space is a fraudster doesn't just commit fraud by filing an erroneous 1099. They file a fake 1099, and then they turn around and file a fake 1040 and claim the withholding on the fake 1099 or the fake W-2, right? And so so you're seeing fraud happen in the 1040 process, in the 1099, and the W. And so the IRS needed AI to help them pinpoint and identify, kind of those activities that were happening amongst various systems, but using like characteristics that they could find trends. So an example would be for, in our space, when a business is making a payment to a vendor, let's say for accounts payable services, they're required to collect a valid tax ID number. If they don't have that tax ID number, they need to back up, withhold 24% taxes and pay that over to the IRS. What we were finding, what we've been seeing for years and years and years, is that businesses do not impose the 24% withholding when they're supposed to. They will report a 1099 with a TIN of 99999, right? So an invalid TIN and no withholding on the form. What we're seeing the IRS do is reject files that contain those types of variables, because to them that's fraud, right? They're not they cannot do anything with a tax return that has a TIN of 9999, right? And some exorbitant income and no withholding. There's nothing to tie those elements to. So they're just rejecting. In the past, they would accept those returns, process them, try to figure out who actually they, belong to. That kind of, those days are over, right? They don't have, and certainly here with the new administration, are not going to have the resources to do that kind of look through work. They need technology like AI to do.
Yes. The Department of Government Efficiency is making sure that they're able to get work done while also keeping a tab on the resources. In fact, I think they're also auditing on the funds allocated on various programs. Like I clearly remember, I think it was the Inflation Reduction Act that actually apportioned $80 billion separate to the IRS for identifying this tax non-compliance. But now they're actually auditing it to make sure, wait, is it really necessary? How much are we using it for? And, I didn't know that, they're using machine learning in fire, but now I know. I'm glad we're moving in that direction.
Me too. I mean, gone are the days of relying on paper, right? The IRS has really done an amazing job over the last 2 years, I'd say, especially with, reducing and eliminating paper and doing so much more with not just AI and machine learning, as silly as it sounds, scanning technology, right? I don't know if they've been doing quite a bit with scanning paper and digitizing it into their processes, right? Just to sort of to streamline some of this. So yeah, it's exciting that they've reached that point, even with some of these decades old systems they have.
Yeah. Paperwork. I guess this is a very old policy. I think the Paperwork Reduction Act, that was like very old. I actually saw that when I was filling out my first I-9 forms, and I'm like, if we are actually reducing paper, why are you... Right. But yeah, we are getting there. It's but long way to go. Like you rightly mentioned, gone on the, I think we're going to the point wherein, we probably see it in the movies, wherein somebody would sift through files and files of data as a forensic accountant to connect those dots that, the 1040 was filed on this date, but the 1099 was filed on this date, and this cannot happen before this, so this is wrong, and those kind of things happening.
All manual. It makes me think of during COVID, those pictures of the IRS cafeteria with the stacks and stacks of paper, and people were like, what the heck? Like, I cannot believe we're still operating. Hence scanning technology, right? Automation, some of the things to get after that. Because even just a couple of years ago, things were being done very manually. Similar.
Yep, they were. But we're getting there. It's always about, the right perspective with the right administration and the right steps in the right direction.
That's right.
But even with this technology coming up, and now there is so much of guidance available IRS is stepping in its efforts to educate the public. This is what you should do. This is how we should do. Various authorities, the Department of Consumer Affairs, everybody's like, this is how we got to do it. But despite having all these options available, business continue to make costly compliance mistakes. So what are the do you have some examples of some common errors that you still continue to see despite this
Yeah.
technology being there?
I think part of this is and I say this because it isn't just a problem of businesses or lack of technology, I should say, in business. It's also a product of our legal system. So here's what I'll say. In
Yeah.
tax reporting, the fundamental thing that states and IRS rely on is the tax ID number that goes with the legal name, right? Wendy Walker has a social security number, right? Sovos compliance has a tax ID number. But the problem is in the United States, we have the largest tax havens in the world because we have pass-through entities. We have partnerships with partners behind them, right? We have corporations with shareholders behind them. We have sole props who have an owner behind them. We have limited liability companies with owners behind them. And we don't always know who those owners are, right? And so for tax reporting purposes, the IRS, they're actually, fundamentally to enforce tax compliance. They receive 5 billion information returns every year. And I always use my hands when I do this, but their systems are taking in that third-party information return data and looking for the income tax return data that goes with it, and they match that off. And of course, if it doesn't match, it gets out into an error exception process. And if it does, it moves on for return or balance due processing. And I think the number one issue that we see businesses grapple with in this space is knowing or ensuring that they have the right name and TIN combination on the return that they're reporting. You would be amazed how many people do not update a bank or an insurance company or even their employer sometimes with the correct information. On the flip side, taking the individuals out of the equation, on the business side, I actually see even more of a problem on the business side. People think, oh, it's one business name, one EIN. Unfortunately, it's not. Unfortunately, what we see that, first of all, M&A is merger and acquisition activity probably cause some of the most confusion. Who reports the 1099s if a company paid income for 3 months of the year and then got acquired by another company? Which one reports? Which one's the accurate, And so even though maybe you figure that out, then what if I was acquired during the year? Do I get the 1099 or does my new company get the 1099? So there's a lot of changing that can happen in information. It's not static information. The IRS issues multi-million-dollar penalties for this issue every single year. So I can tell you, I come from practice. I work for a couple of large banking organizations. In my purview was years and years of many entities worth of penalty notices related to this issue that I was trying to work through and figure, well, what's wrong with that particular taxpayer's name and tax ID number? This is an area where a business becomes liable for withholding taxes as well as those penalties, and they're required to take certain steps that the IRS identifies in the law in order to get out of those penalties. And if they don't, then they're subject to them. So that for me is probably the biggest mistake I make, because you think with so much out there to verify a person's identity, how can I not have a valid name and tax ID number? But you know what? You would be amazed how many casinos, banks, insurance companies, multinationals, right, that come to me all the time looking for a solution just to say, do I have the right information in the IRS's eyes when I'm going to file this return? So yeah, that's probably one of the biggest ones.
That's very well put, in the IRS eyes, that's very well put, very well put. But and you mentioned that, like IRS has got things in place that educate people that, hey, it's okay, you can commit errors and this is how you can correct them and everything, So, but, just for our listeners, like what should businesses do to fix such compliance errors before the IRS steps in?
Yeah, absolutely. I think, some of this goes back to the AI conversation we had, right? I think it's modern technology. There's no question that modern technology, tax technology, is going to be needed to get ahead of what we're seeing IRS, state, globally from a tax perspective. And I think in my years of growing up in industry, it was like, oh, there's a new tax law. Let's go get a system for that. Oh, here's another tax. Let's go get a system for that. And so we, as a corporate tax department, had point solutions, point tax solutions that, all over the place we're kind of solving or supposed to be solving for some of those issues. But what ends up happening is you not only do you end up with a bunch of different solutions, but you also end up with solutions that solve like 80% of the problem. And so you've got manual processes wrapped around these things for the 20% that isn't covered. And I think now, fast forward and as a larger organization, you've got so many, as a corporate tax leader, you've got all of these solutions, you've got all these manual processes. You need a way to pull all of that together and organize and leverage that. So I think one of the big things I'm seeing is AI being used as like an orchestration layer over top of, right, all of those point solutions to help people really identify errors across. It goes back to, I'll give you an example, companies reporting those 1042-S forms we talked about, they're also required to report an annual 1042 return to the IRS. So these 1042-S forms go out to all of these individual customers or payees, and then separately, they file one return that's supposed to aggregate and report out details from those individual forms. This is an area of audit that I see as a number one priority for the IRS because businesses do not take the time to actually reconcile the information between those two sets of data. And so they'll file this set of data and then later file this set of data. And the IRS is like, this doesn't look right? And so I think what we're seeing is a lot of, kind of AI being used in a way to sort of look at that type of stuff happening in the siloed solutions and help to point out where things don't make sense, across the different solutions.
That's very interesting. That probably also looking into the ITIN records to make sure the name matches and
definitely. So that was going to be my second one. So second one, which is kind of back to what I was talking about first, which was the name TIN penalties that we were talking about. You're right. The second one, of course, is the TIN matching. I talked about how making sure you get it right in the IRS's eyes, right? Like the IRS has their own database and people don't understand that there's social security numbers, there's adoption tax ID numbers, there's tax ID numbers for foreign people. There's just a variety of tax ID numbers out there that can be issued. Social Security just has social security numbers, but the IRS has the rest. And so people will use things like LexisNexis or credit bureau information to try to, for reporting purposes, thinking that that's, what's up to date. But again, we want to know what the IRS has on file. That's what's going to determine whether you get a penalty. So I think one of the biggest things that I see, mistakes that I see businesses make is not utilizing the IRS's TIN matching solution. So they're like one of the only governments in the world that have an actual API or manual back office access into a database of all of the tax ID numbers and names that they have on file. Now, of course, you can't say, what's Wendy's TIN? Let me have Wendy's social security number. It's not going to give that information.
I was going to ask you that.
Yeah. No, because people will say that. Will it just tell me it's off by a digit? No, it's not going to tell you that. But what it is going to say is, you know what, that social security number that you gave me with that name, that's never even been issued by Social Security, or that's owned by a deceased individual. Or, doesn't match at all. Just they'll let you know in one way, shape, or form whether or not the information matches, which gives you the ability to go off and get the information correct before you file.
Giving away information without giving away too much of information.
Exactly.
You want to be cautious, right? You don't want fraudsters to start guessing stuff. Because, this goes back many years back. I remember, I think this was a flaw in, Hotmail or MSN, wherein if at all you input the wrong password, it would kind of say that was not the password that you're using. It would kind of give a hint into what the password
what your other password was.
And everybody just exploited it. It was crazy. But there was many years back. Now, a lot of things have come in, and that's
right. But that's a great point, though, because password management has evolved quite a bit over the years. So has this.
So is this. Absolutely. Everything falls into place in some way or the other. And, there is this, with all these changes happening, there is this thing that I continue to see every year. Businesses, they are operating either understaffed or with untrained tax teams. The untrained tax teams is more lethal, I think. So, if you have ever been exposed to this team structure, how should companies structure their internal compliance teams to ensure there is accuracy into this?
Wow, what a great question. I have to tell you, this is an area that in my career we sort of paved the way for this as my career has evolved, meaning that
Right.
tax was always sort of a corporate thing, and those tax people kind of sat off at the other part of the business, and no one really interacted with them, and we didn't really know what they did, that kind of thing. And I think that over the years, what we have found is that that's not a good thing. Here's why.
Yeah.
Penalties can be assessed, millions of dollars can be assessed by the IRS every year for a variety of different types of tax issues. And if you don't have a good balance in the organization, right, that stuff can get hidden very quickly, and the leadership in the organization may not realize really what's going on. And I'll
Yeah.
give you an example. In my career, I was hired to work for a financial institution that largely did all of its information reporting tax through operations. It never had any corporate tax oversight or compliance oversight of those operational teams. And so when I was hired to come into the organization and look at this, my first question, having experience in this world, said, well, where's all the penalties? Who's tracking the penalties? And they were like, what penalties? And so it took me a few months, but I found them, and I found who was hiding them, and I found where they were, and I was able to get, transparency into them. But I think it was a really good lesson for the organization to understand that, yes, tax is a next necessary evil, right? This is a cost center. This is something you have to pay for. But on the flip side, if you do not invest in this correctly, you absolutely can see yourself paying a heck of a lot more money in fines and penalties to the regulators, just because you didn't, have proper resources or technology in place to mitigate it. So I really think that the balance between operations and tax or operations compliance is super important in this space.
Yeah. I mean, like you rightly mentioned, there needs to be a balance between compliance with operational efficiency. Compliance is essential, and so is business to work with efficiency. That's also important, right? But like you mentioned when you talked about your career, how you started into tax compliance and now you're into this. But even today, tax compliance is often seen separate from business strategy,
It
and
is.
it shouldn't be. What role should tax departments play in this overall business strategy for
Yeah.
organizations?
I will tell you, again, another thing that I think is kind of evolving, paving the way a little bit through my career. But, I've worked in many organizations where a new product gets launched, or somebody is off, administering a new process in a particular area that not everyone is aware of. And the next thing you get hit with the tax requirement, and somebody from corporate tax is like, well, now we have to pay this tax over here, and we have to file this return every year, and it's going to cost the organization this much money for that product that you just launched. So
Yes.
I think that, the tax department is so important to provide critical inputs, into those key decisions that are being made by leaders. And the new product launch is absolutely one of the key ones. I once worked with a U.S. I did consulting for a U.S. Fund manager. So they
Yes.
offered, financial investment products for high net worth individuals, high institutional investors. They set up a whole bunch of products to be paid out of a Cayman Islands entity,
Mm-hmm.
not understanding that any of the US taxpayers that invested in that product would be subject to 30% tax withholding, because there's no tax treaty agreement between the US and the Cayman Islands to reduce that, like there is, let's say, in Canada or the UK. And so my point there is that the lens of whether a product is going to be financially viable, right, absolutely needs to include tax, so that you can
Yes.
avoid not only the costly penalties, but so that your customers or you can achieve, the revenue growth targets that you were expecting from that market.
Yeah, absolutely. I mean, very well put out. They need to, tax departments need to be involved from the conceptualization level itself. So, because they're able to see those effects and give you the right clear picture that if you're going to do this, this is what's going to happen. Uh, and like you mentioned, Cayman Islands, I don't know how they must have even thought of Cayman Islands, because I know that, when we hear the word Cayman Islands, everybody thinks that, oh, it's a safe tax haven. Rich, rich people set up their companies there so they don't have to pay any tax, but that's not true.
People say that a lot. They just don't understand. Again, if you don't understand how tax works, that can sound, that's an easy, assumption that you can make.
Yeah, absolutely. But like we see where we are today. We see that the industry is changing. We see that the IRS is adopting machine learning. We see it's moving into new directions. We see businesses also using AI into orchestrating this data and making sure they remain compliant. We're seeing the teams getting more involved. But where do we see as the future? You know, I know this is a little bit of a guesswork, I know, but if I were to ask you, having you being in the industry for so long, with your pulse in the industry, where do you see tax compliance heading in the next 5 years?
Yeah, I definitely see there is a transformation of corporate tax going on. So I'm seeing that the corporate tax professionals, first of all, are absolutely going to need to be more technical experts than they've ever been, right?
Right.
So there's no question that tax technology is going to be the linchpin of any corporate tax compliance department strategy, and particularly because of if they're operating in many jurisdictions, right? But I
Yes.
think that AI is really going to transform the organizational process around tax compliance. Between creating efficiencies. I think that when organizations have not just income tax obligations, but they've got information reporting for customers and vendors and payroll and property tax, again, all those point solutions that are being used, along with some manual processes, they can really automate and make efficiencies in those processes with AI. So I really see a lot happening in that space. I also see tax legislation changing. I mean, here in the United States, we are seeing a huge change going on at the federal level. Lots of discussion going on with respect to tax in general. One area that I think we're going to really see continue to evolve over the next 5 years is in the crypto tax reporting space. We're
Yes.
seeing the IRS Treasury finally released, I think, our first round of regulations last June for a new 1099 DA to be reported by those
Yes.
businesses, starting with 2025 transactions. So we're going to see, a huge volume of new 1099s going into the IRS, but we're seeing that on the global scale as well. We're seeing the European Union requiring, in other countries like India,
Yeah.
requiring information reporting of digital assets for their residents. So crypto assets in general, that reporting framework is something that's going to evolve quite a bit over the next year. Some people are thinking with the Trump administration, because it is a very crypto-friendly administration, that maybe we'll see less tax requirements for crypto. I don't think that's true, largely because there wasn't really any tax requirements for crypto. So I don't think that's going to continue. But I think what we will see maybe is that the decentralized finance area of crypto, who has been waiting for some more clear framework from the IRS on how to do reporting, I think we're going to see some better reporting requirements come out of the Congress for that over the next couple of years, that will really shape that market. But I think with respect to the centralized exchanges, they're over the next few years implementing that new 1099 regime. So I think that's going to really impact tax administration, as a whole.
Yeah, I mean, very well put. And in fact, you mentioned about Europe and India, how they have already started. There's a reporting thing, and then there's also this thing called, I think people are also moving towards real time,
Yes.
tax reporting. Like it's already happening in some countries. Do you also foresee that to be becoming a standard in the US in the coming years?
I hope so. I don't think it's going to be the next 5, to be honest, because I think there's some issues with our constitution and the way, our income tax laws work compared to other countries. But I do see the IRS accelerating things or trying to get things more in real time. So here's what I mean. Businesses today, typically, for example, you issue out your employee W-2s by the end of January and you file them with Social Security. You now have to issue 1099 NECs for contractor payments and file those by the end of January. But all other 1099s that businesses issue do not get filed until the end of March. And most of them file a 30-day extension, so they don't even get there until the end of April. Well, I don't know about you, but by the end of April, the majority of US taxpayers have filed an income tax return. So what's the use of those 5 billion information returns, right? If the IRS isn't getting most of them until after people have already filed for a refund. And the IRS knows this is a problem. And the problem for them is it's a federal law. They can't just say, oh, now the due date is this, right? Congress has to make that change. And so I think, and they've been talking about this, they being Treasury officials and officials within the IRS for a number of years, that this is a fraud issue for them, that having people filing for income tax returns without having that third party compliance there for them to verify that it's accurate, it ends up that they issue erroneous refunds. They have to go back and claw them back. So I do see a shift at the federal level here where leaders are trying to convince Congress to change the law to require reporting to happen anytime at the same time you issue out the statement to the recipient. So I mean, basically at the end of January, as opposed to the end of March. Businesses will put up a fight. There's a lot of reasons like why they need those couple of months to really close the books on the prior year and get it right. But I think convincing Congress to say that taxpayers have to wait for their refund is probably not going to happen. So instead, I think they are going to probably convince Congress to accelerate some of the filing dates and get things a little more in real time here in the US. But outside the US, boy, for those who are listening that don't know, I mean, this is already a thing, right? Here at Sovos, we have solutions around the world that are at time of transaction deducting the tax and paying it directly to the government, right? There is no kind of third party hold the tax, pay it later kind of thing that's going on. So I do think the IRS would like to get there, but like I said, I think probably not in the next 5 years, but I could see us with maybe a framework and some working parties and things like that happening, but maybe a little further than 5 years before we get to real time.
Yeah. I mean, like everybody would love to move from a reactive phase to a proactive phase, and that's what we want to get to, right? I mean, like in your current role, we are mostly you. I mean, you love to be in a proactive role, and you are trying to, but you'd love it if it all that became like the norm, because that's how the systems are structured, and that's how the processes are, and that's how the laws are.
And you know what else, Saul? Like, who wants to wait until the end of the year to do a lot? Because I volunteer to do tax returns every year this time of year. And it's so hard, when you're talking to a taxpayer and you get done calculating and they owe money and they have no idea why, right? And so it's like, really would be nice if things were more in real time so that you knew as a taxpayer throughout the year, like where you stood with the IRS or the state so that you didn't owe these big tax bills. So I do think it isn't just beneficial for the government, it's for us too as taxpayers.
Well, yeah, absolutely. I mean, like I being a taxpayer, I keep like I project it for the year, and then I'm tracking it every month that, okay, what happened? Because life happens, things happen. If something were to go up and down, how is that happening? Where am I far? Am I beyond? Am I behind? What is it? Keeping a track of it. I would love it if everything became real time. I mean,
wouldn't it be great? You could just see that. I know it.
It's crazy. I mean, I'm radical. I mean, we'll look forward to those changes. Now, before I let you go, you have years of knowledge, but if somebody wanted to stay ahead of the tax compliance, are there any resources or places that they can regularly visit?
I think it depends on the regs, right? I think this is an area that I find is interesting. I think there's some, you can subscribe to things out there that will give you like income tax updates, right? But income tax, I mean, is it corporate income tax? Is it individual income tax? Is it estate tax? Is it trust? So, I mean, there's so many areas of income tax, right? I think in the information reporting world, what we have always found to be a struggle is that we would get income tax updates. So, okay, we know that a new type of income is going to probably have to get reported on a 1099, but we would never actually get updates from those same services to say, oh, and it's going to go on this 1099 and it's due by this date. And so for people who are looking for resources around information reporting and withholding, that is something that we've curated over the last number of years and that we are one of the only ones who have a repository of. But outside of that, I tell people I am subscribed to a variety of alerts, different government websites to alert me when changes are happening. And then the other thing I would say is our friend AI. We keep talking about it, but here at Sovos, we are using AI for a variety of ways, but in this way, to research and be kept apprised of changes that are happening. There's almost 19,000 taxing jurisdictions in the United States. So, leveraging AI to keep up with those changes wherever you can is absolutely going to be a game changer.
Wow, Wendy, that was really insightful. I didn't quite know that we could actually use AI for tax research, but you rightly said, it has access to all the data. It is able to sift through a lot of data and provide you with the information that you need. Just need to be a little bit cognizant. We want to ensure that we don't 100% rely on artificial intelligence. But with having said that, on that note, we come towards the end of this podcast. Thank you for being here and sharing your insights on this episode of the podcast. And to our listeners, please let us know how you think about this podcast. Share your feedback. We'd love to hear in the comments. And with that, thank you so much for joining in. Until next time, keep innovating in everything that you do. Cheers.
Access latest and trending CPE courses with my CPE One Unlimited Access subscription. Subscribe now